All right, welcome to the video, guys. Anthony here with Hawkeye Traders. Hope everyone's having a wonderful day. I want to dive into taking a look at a Widebar, which is part of our volume software that we provide here at Hawkeye, and pairing that with, of course, high surges of volume. More often than not, these wide bars, which populate on your screen in this purple color that you can see in this very large or very wide bar, given the name, and by taking a look down below at our proprietary volume measurement, you can see this ultra high buying volume with an ultra high volume red dot faded behind that bar. So let's take a look at this, kind of walk through the thought process of when one of these wide bars occur. Now, this is 8:30 a.m. Eastern Standard Time, New York Seaboard time, and this is obviously an event of economic news being released. This is the Euro US dollar Forex pair, and we're looking at a 3-minute chart, so this would be an intraday type setup. And I want you to notice when we get huge or wide bars that look like this, and we're warned by this change in color, it's extraordinarily important to take a look below and see who's in control, because more often than not, these wide bars can in fact offer reversal opportunities, right? Economic news hits the market all the time. I strongly advise my traders to step away prior to the news coming out and then analyze what the volume and price action is telling us after the news has hit, to see if there's a way that we're able to now leverage that big move and potentially extract some profits from it. Again, when these transpire, there's normally a good chance of one or two things to happen afterwards. Follow through, depending on the way the volume and price action offers interpretation, or reversal. In this instance, we got a really great reversal. You could see the buyers essentially gave it all they had, right? But if you notice the sequential 3 bars, there was neutral volume, meaning that while there was high volume, there wasn't an imbalance of buyers or sellers. And you can see that we basically, retraced, I would say, 90% of this wick, and we sold off. So we took this aggressive impulse, right? We probably closed, I would say, leaving 35% of the overall bar inside of the wick. If you see this high of buying volume, you should see this bar close in the top probably 10%. So when there's a large wick on excessive volume, to me, that means that this area is an area where buyers are being absorbed, and I want to use that area to my benefit. Okay, now I need to let price action prove that to me. What I want to see is price continue back up into the wick, but not be able to penetrate through it or settle above it. So if I believe that the buyers have been absorbed based upon what the volume and price action is telling me, where am I looking to try to fade this or get short? I want to try to get short as close as I possibly can to the top of this wick, because I'm then taking the very least amount of risk. Right? Again, at the end of the day, I tell this to traders all the time. You are a steward of your account. This is not gambling. This is not entertainment. It is your job to have the first and foremost priority of preservation of capital, meaning you only want to take a trade with the least amount of risk that you can possibly manifest out of your interpretation of what's happening. And in doing that, guys, there are going to be times where you just don't get what you want, right? The market doesn't offer you what is the most ideal scenario to give you that lowest risk trade. And those are the times that your discipline has to come into play and say, okay, the market's not giving me exactly what I want. I'm willing to not take the trade. A lot of traders struggle with that psychology because they feel like, I'm sitting at the computer, I have to trade, otherwise I'm wasting my time. And you couldn't be more wrong, right? The value of a good trader is their ability to not let their emotions overtake their logic. What is their logic? Their logic is their trade plan. Their logic is their risk management plan, right? What is their emotions? Their impulse desire to just enter the market to see what happens, to see if they're right. That will blow up your account. I promise you. I promise you, it will not end well. You may get lucky a few times, but luck will run out. I can assure you of that. I've watched it happen dozens and dozens of times throughout my career. All right. So what am I looking for? If I believe that the buyers were being absorbed inside this wick, I'm looking for a retest within this wick to show me that there's a chance that we're not going to be able to penetrate this area. And that's what happened, right? These next 3 bars, in fact, continue to make highs inside of the wick. You can see on substantial volume, but we were unable to overtake the wick. So we take an impulse to the downside. We take a correction. We take another impulse. We consolidate. We, in fact, retest the wick one more time, and then we continue to sell off. Guys, if you had a good read on this, and you said, all right, listen, I see that we're not making any progress here. Let me take a short position. All right, let me take a short position. I'm going to risk what? 6 pips, roughly. Okay. And then let me come in here and say, all right, is there a chance that we could pull back? Understand that if this is done properly, through proper assessment, understanding that this wick should now represent an area of supply because the buyers are being absorbed here, that we should never violate this area. Our risk is only from these candles here that have pushed back higher to the high. Notice even on these 2 little corrections here, we were unsuccessful in reapproaching the high of that wick again, right? Like we came literally right into this level specifically, and we were unable to penetrate any further. So even if you got short here on this pushback up into the wick, let's just say you got excited, right? Because this is what happens all the time. We see some excitement and we go, oh my God, I got to get in. I'm going to miss the opportunity, right? More often than not, it pays to wait. I cannot express that enough. Yes, you will miss a few setups. You will also avoid a lot of stop outs by just simply waiting. You will get a better risk to reward by simply waiting, right? More often than not, that is in fact the scenario that ends up playing out. That is both day trading and swing trading and position trading, okay? Like more often than not, you will be presented with a better opportunity if you're willing to be patient and compartmentalize that emotional impulse to just wanting to hit the buy or sell button. Again, even if we just got antsy and on the close of this candle we said, oh, we've retraced about 50% of this wick, I'm going to get short here and put my stop here. Yes, you probably would have freaked out for 5 or 6 minutes thinking you were wrong, but even still, you never even return back here once you take the breakdown below. Okay, you come in, you pull back up, come in, consolidate, right? This is congestion, a little consolidation. You can see that we get a little floor here. We aggressively pop back up. Notice all this super high selling volume that comes into the market upon retesting this big wick here. And then the market continues to sell off. You only need a little piece of this, guys, to more than compensate yourself for the day's pay. All right, like this is, we get so fixated in taking these, huge home run big trades that we forget about the base hits. Right? If you can stack base hits, you can be wildly profitable. But you have to be disciplined. You have to be consistent in your approach. So next time you see a wide bar print on your chart, with ultra high buying or selling volume, I want you to step back. I want you to understand what's happening in the market. I want you to give yourself a minute to put into context the scenario that you're expecting to happen. And then I also want you to pause and say, is there a possibility that I could get a better entry? And if I could get a better entry, can I compartmentalize that emotional reaction to just hitting that buy or sell button and saying, all right, I'm going to take a step back. I'm going to wait and see if I can get a better entry, because I know more often than not that my trades typically will go against me before they go in my favor, because I normally am anxious to get into them. At this point in my career, I do exactly what I'm preaching, right? I wait, right? I will wait to see if I get a better entry. And most of the time I get a better entry, and infrequently perhaps the trade runs away from me, and I won't chase it. I'll just wait for another opportunity, right? Well, will I be upset that I missed it? Okay, maybe. But I'll also look back and reflect and go, okay, I followed my very disciplined approach. And I said, hey, Anthony, you know that it's better to wait, right? Over time, you've learned it's better to wait. Because where do I want to get short? I want to get short as close as possible to the top of this wick. When I see this come through here, I'm like, all right, if I can retest this wick or potentially just push through it, that's where I want to get short. Because now I see two candles with neutral volume telling me that there are no more buyers interested in genuinely overtaking this. Neutral volume is telling me that, hey, guess what's happening? So absorption, right? So the buyers get absorbed here, market sells off, comes back up, buyers get absorbed, market sells off, comes back up, buyers get absorbed, market sells off, price comes back up. You can see we're having a hard time getting through this level right here. What's happening? They're getting absorbed. Okay, so take the time to look at context of what the market's doing. You can see that we're selling off from this wick, and can I identify through the volume print that Hawkeye provides, is there an area at a high price that buyers are being absorbed because the market context is telling me that we're probably going to pull back? And you can see we essentially retraced all the way back to the origin of where this big move came from. Right? Right? We pulled all the way back. Before we started finding support, we basically retraced this entire wide bar. How lucrative would it be to go huge excessive buying, zero follow through, low risk? I can probably fade this thing back to its origin. So this huge bar at 8:30 by 10:30 had been completely given back. More often than not, guys, on news releases, this exact thing happens. I see it every day. Why? Because I trade the market live every day. Why? Because I can never bring you these valuable insights if I'm not sitting here witnessing it happening live every single day. So I hope you learned something from this video. If you enjoyed it, please leave a like. If you have a question, feel free to leave a comment below. I'm going to leave some links below as well. There's some content there I'd like for you to click on, absorb. Feel free to email myself or my concierge team at Hawkeye. Also going to leave a phone number if you'd like to speak to somebody. Because, guys, if you're not aware of what's happening within the inside of these candles, because you don't have the print that Hawkeye provides telling you, hey, we have excessive buying here, we have lack of buying as we're reapproaching the high, that could be wildly profitable to know that by having these bars printing white instead of printing red or green, because we know that, hey, there's neutral volume here. Nobody's in control. So what's probably happening? Well, probably what's happening is the buyers are trying and the sellers are absorbing. How valuable would it be to know that there's a great chance that we're not going to violate that 8:30 candle? I think it's invaluable. Why? Two reasons. If I'm long, I want to take my profits. If I'm not long and I'm looking to get short, I want to know where the buyers are being absorbed so that I can put together the lowest risk, highest probability thesis around my trade plan, around my risk management, so that I can step into the market and have the opportunity to profit efficiently and conservatively. And if that's what you're interested in learning, that's what we teach. And guys, the indicators are as simple as can be. You can see I will hide the drawings on my chart. That's all you need. A clear picture of the relationship between volume and price action. Once you're able to understand what they're doing, you will take all the other stuff off your screen because you'll realize it's all worthless. God bless. I'll see you in the next video, and I hope you have a great day.